If you are searching for a simple, reliable, and highly accurate Forex scalping strategy that works consistently, then make sure you watch this video until the very end. In this tutorial, I will be explaining a powerful Bollinger Bands and price action reversal strategy that provides clear entry signals, small stop losses, and a naturally high win rate, especially when the market is moving sideways. Many traders misunderstand or misuse Bollinger Bands, which leads to unnecessary losses. But today, I will show you the correct professional method that actually produces dependable results. Welcome back to AM Trading Tips. If you are new to the channel, I invite you to like the video and subscribe because I regularly share easy-to-understand trading strategies, practical setups, and helpful tips to improve your overall accuracy and confidence in the market. To apply this strategy, you only need one indicator along with simple price action. You can go to your indicator list, search for Bollinger Bands, and add it to your chart. After that, set the parameters as follows. Period, 20. Standard deviation, 2. Apply, 2. Close. These settings will create the 3 Bollinger Band lines on your chart, the upper band, the middle band, and the lower band. To make your setup even easier, I have already prepared a ready-made MT4 template for this strategy. You can download it directly from the link provided in the video description. Once you load this template into your MT4 platform, the complete strategy will be automatically arranged for you, and you will be ready to start practicing immediately. Before we move ahead, please remember that this video is for educational purposes only. Forex and binary trading involve financial risk, and it is very important to practice on a demo account first and follow proper risk management at all times. Now, before taking any trade using this strategy, you must confirm that the market is in a ranging condition and not in a strong trend. A ranging market is very easy to identify. You will notice that the middle band, which is the 20 simple moving average, remains mostly flat. Price frequently moves between the upper and lower bands. There are no long or aggressive one-direction candles dominating the chart. When these conditions are present, Bollinger Band reversal setups work extremely well. Let's begin with the sell entry conditions. A sell trade becomes possible when the price touches or breaks the upper Bollinger Band. After this, you should look for a clear bearish reversal candle. Some strong patterns include a shooting star, a bearish engulfing candle, a bearish pin bar, or an evening star formation. Once this reversal candle closes, you enter the sell position on the next candle. Your stop loss should be placed above the high of the reversal candle or slightly above the upper band. For the take profit target, you can use take profit level 1 to the middle band, or take profit level 2, the lower band, or a risk to reward ratio of 1 is to 1.5 or 1 is to 2, depending on your trading style. Now let's look at the buy entry conditions. A buy signal appears when the price touches or breaks the lower Bollinger Band. This tells you that the market is potentially oversold and preparing for a reversal. Next, you wait for a bullish reversal candle. Some powerful bullish patterns include a hammer, a bullish engulfing candle, a pin bar, or a morning star formation. Once the candle closes, you take the buy position on the following candle. Your stop loss should be placed below the low of the reversal candle or a few pips below the lower band. Your take profit target can be take profit level 1 to the middle band, take profit level 2 the upper band, or again a risk to reward ratio of 1 is to 1.5 or 1 is to 2. There is one important rule you must always remember. If the price begins walking the band, meaning 3 or more candles remain outside the Bollinger Band in one direction, you must completely avoid taking reversal trades. This indicates that the market is trending strongly, and the strategy is not suitable in that situation. The best time to use this strategy is during the London session and the New York session, when price movements are smoother and more predictable. Avoid trading around high-impact news events, always wait for strong reversal candles, and use this strategy mainly when the market is ranging rather than trending. I also understand that remembering all these rules during live trading can feel overwhelming, especially if you are a beginner. That is why I have created a free step-by-step checklist PDF that explains every rule of this strategy in a simple and easy-to-follow format. You can download this PDF from my Telegram channel using the link in the video description. You can keep it open on your phone or a second screen while trading to avoid confusion and make faster decisions. In this setup, I entered a sell trade after the price moved up and touched the upper Bollinger Band, which often signals that the market is overstretched. At that exact point, a strong bearish engulfing candle appeared, clearly rejecting higher prices and showing a shift in momentum from buyers to sellers. This pattern is one of the most reliable reversal confirmations when it forms at the outer band. Once the bearish engulfing candle closed, I placed my sell entry near the middle Bollinger Band, which acts as a balanced entry zone after a confirmed reversal. For protection, I set my stop loss above the high of the engulfing candle, slightly above the upper Bollinger Band, ensuring the trade would remain safe against normal market fluctuations. My take profit was placed directly at the lower Bollinger Band, which is the final target in this reversal strategy. After entering the trade, the market began moving downward in a controlled and steady manner. The candles drifted away from the upper Bollinger Band, showing that sellers were maintaining pressure. There were a few small pullbacks along the way, which are normal in a sideways environment, but the overall direction remained in line with the reversal pattern. As the movement continued, the price passed through the middle band and slowly progressed toward the lower band. The chart structure stayed clean throughout the trade, and at no point did the price come near the stop-loss level placed above the engulfing candle high. This confirmed that the reversal setup was strong and that the market was behaving exactly as the strategy anticipates. In the final phase of the trade, the price continued its downward move and eventually reached the lower Bollinger Band, triggering the take-profit target that had been set earlier. The market respected both the stop-loss and take-profit placements perfectly, demonstrating how well this strategy performs when a clear reversal pattern forms at the outer band. All right, now that this trade is done, let's move ahead and search for the next perfect trade setup based on our strategy. In this trade example, I entered a sell position after the price moved up and touched the upper Bollinger Band, which is an important overbought zone in our strategy. At that level, a clear shooting star pattern formed, showing strong rejection of higher prices and signaling that buying pressure was weakening. This is one of the strongest reversal signals when it appears at the outer band. Once the shooting star closed, I waited for the next candle to confirm the reversal. The following candle closed bearish, giving me the confirmation I needed to activate the sell setup. After this confirmation candle finished forming, I entered a sell trade. My stop loss was placed above the high of the shooting star to keep the trade protected, and my take profit target was set directly at the lower Bollinger Band, which is the natural exit level for this strategy. After entering the sell trade, the market began moving downward gradually, following the expected reversal structure. The candles stayed below the confirmation level and continued drifting away from the upper Bollinger Band, showing that sellers were now in control. Throughout the progress, the market respected the direction indicated by the shooting star pattern, and the price slowly moved toward the middle band. Although there were small pullbacks during the movement, none of them affected the overall downward trend. The stop loss, placed above the shooting star's high, remained safe and untouched. As the candles continued forming, the price moved below the middle Bollinger Band and steadily approached the lower band. I allowed the trade to run naturally without making any adjustments, as the setup was already planned, with a clear SL and TP. In the final stage of the trade, the price continued moving lower and eventually reached the lower Bollinger Band, which triggered the take profit level. The setup worked exactly as this strategy is designed to function. The shooting star at the upper band provided a strong early warning of a potential reversal, and the bearish confirmation candle validated the signal perfectly. This brings us to the end of our live trade example, and I hope it helped you understand the strategy more clearly. If you found this strategy helpful, make sure to hit the like button right now. Comment, send more strategies if you want me to continue this series with part 2, and don't forget to subscribe to AM Trading Tips so you never miss any of my upcoming videos. Thank you for watching, and I'll see you in the next video.